While the winter melt up in stocks has most investors thinking we're in for a great 2021, but a lot of Wall Street firms are coming out with some forecasts saying otherwise, including Goldman Sachs. Their analyst, David Koskin, said that there's a few reasons why we might not see continued enthusiasm in the stock market, including a rocky rollout of COVID-19 vaccines, as well as a potential return of inflation and policy uncertainty. So we're going to be talking about all this with my guest today. He is Frank Holmes, CEO of US Global Investors. Frank, welcome back to Stansberry Research.
It's great to be with you, Daniela.
So obviously, stocks had a great 2020. A lot of people are stepping into 2021 thinking this will continue. How do you see it, Frank?
Well, a big part is that we believe in government policies are a precursor to change. So we monitor both monetary and fiscal policies. And in that end of it, the monetary policies, which is most interesting, is taking a more dominant stage with the G20 countries. They're all practicing in different forms, MMT, modern monetary theory. And that's basically money printing and getting money into the economic engine in any form or fashion. So I think that crypto and gold and some of these hard assets, they're going to do very well in the next couple of years for sure. I feel this way because G20 is the quick solution is to print money. So now we come back to the other part of the fiscal policy is will they raise taxes? And Biden coming into power, if he raises taxes and goes after success or soak the rich and whatever that narrative, if that happens, then the market will go through a big correction because taxation and regulation is always money coming out of the engine. So even the money printing, it gets stopped. Right now, it appears that Biden is more of a moderate. We'll see by February after Chinese New Year. But I think we're in a pretty strong run until the end of January.
What about the fact that we'll see Janet Yellen, a former Fed chair, as a Treasury secretary? Do you think this will give the Federal Reserve a greater toolbox to play with here?
Yeah, more latitude. Clearly, Powell has shown that. If you take a look when Greenspan left, the Fed's debt level, the Federal Reserve's balance sheet was 6% of GDP, and today in America it's 33%. So all the negative stuff on Greenspan makes him look like he was very frugal. So, but I think this World War III against the coronavirus is very significant, and they're all printing money. So I think that gold and several of these hard assets are going to rise, and same with art. Art is going to rise against all this sort of money printing you're seeing.
And you're in front of a beautiful piece of work there, Frank.
My big Ben.
Hopefully will bring luck to all of us here, to all of us as investors. But let's talk about gold and Bitcoin. As I've mentioned multiple times, you're one of the few that actually is involved in both cryptos and gold. You have embraced both. You are invested in both. But what do you make of, Bitcoin knocking on the door of $30,000 as we speak today, Frank? Are those valuations real, or is it the same as looking at Tesla, which is up, 730% this year?
Well, it's a new digital world, and digital money is a component of that digital. Anything is Amazon is created the biggest, wealthiest man in the world. It's all a digital. You can see that bifurcation. But what's most interesting when you look at the stocks, it's revenue growth. And we know from examples as high blockchain mining, it's up 2,600% this year. And it's like gold going up and the gold stock showing the fastest growth in revenue, and cash flow will go even greater. But there is a big bifurcation in the S&P 500. 20% of the companies cut their dividends. So that was a big impact. So if you take a look at those with strong digital presence, now we see Airbnb going public. Anything that's digital is generating revenue. Those two components, they're getting the money. And with zero interest rates, this is what happens. It's a function of negative real interest rates around the world and zero money here. So money is showing up in different paths. I don't think that paradigm is leaving us in the next year.
Let's talk about Hive, Frank. You've really managed to turn this company around. I had spoken to you when things were ugly, but you've turned it around, and congrats to you for this. What's been the biggest lesson for you? from this
Well,
experience?
the biggest part is in the crypto space is such a new industry, and transparency and basically good corporate governance lacks dramatically. And that's one of the biggest things I could see in that industry. And then you have to find loyal people that are very smart and have great values, good ethics, and respect corporate governance. Well, they're the ones that have been helped in turning it around and staying very focused. We made a bet where everyone's negative on Ethereum. We're the single biggest mining company that's producing Ethereum. We're expanding that footprint. And the next vision is to buy our own facilities and control our destiny by getting in the data management business, people with a deep skill set. So that's what we're working on, the latest acquisition.
Frank, finally, let's wrap by talking gold here. You've gone on the record with some very bold predictions for gold, 10,000, 20,000. I know you're not saying that's going to happen in 2021, but small steps here. Where do you see gold starting off 2021 here?
Well, it's a non-event for gold to go up 20% from here. It's just a normal DNA volatility. Last year on the surge, it went up 2 standard deviations, which was up over 45%. So you can get that in some type of a calamity happening globally where they have to print more money more aggressively. Then I think you see gold trading up. It can easily tack on $800 from these price levels.
Do you have a preference right now of being invested in Bitcoin versus gold?
No, they're both unique alternative asset classes. There are people I know that won't buy either, and all they do is buy art. And myself, I enjoy all of them. Our good friend Kevin O'Leary, he likes watches, and that's just sort of a focus on. So I think that Bitcoin is part of that new digital world, and it is clearly it's an alternative asset class. Gold is an alternative asset class for 40% of that world, which is fear trade. Remember, 60% is the love trade, and that's jewelry demand. And rising GDP per capita of China and India and Southeast Asia is most important for that rising demand. So every time gold goes through a big correction, what it did from July down to recently, you see all of a sudden the consumption picking up out of Asia. And then we have a rocket again on the fear trade.
Frank Holmes, thank you as always for educating us with your insights. I want to take this time to wish you and your family a very Merry Christmas and a Happy New Year. You're always welcome on the show, Frank.
And same with your lovely family, your expanded family in 2020.
Yes, I know 2020 was a very hard year for many, but for me, it was a tremendous blessing. Thank you so much, Frank, and thank you for watching on behalf of the Stansberry team. We wish all of you a very happy new year. Thank you for watching. Thank you for your support, and please continue following us on all our social media platforms. I'm Daniela Cambone.